Coming to you from sunny Orlando, Florida, welcome to the Paperstac podcast, where we cover current topics in the note industry, give you tactics for your note business, and talk with industry leaders to make you a better note investor. And now, your hosts, Brett Berkey and Rick Allen.
Hello, welcome to the Paperstac podcast. I am Brett Berkey and this is Rick Allen. And Happy New Year. Happy New Year to 2023.
Yes, goodbye 2022.
That's right.
Exit stage left.
So, yeah, we're finally here. And so it's January or February when we're watching this. But so you had a great New Year's?
New Year's was good. It was, this was like that New Year's where I was like, I don't know, it's because I'm getting older. And I was like, I don't want to go out.
I don't either. I went to neighbors' houses. I was
I
like, it's 12 o'clock. By the time, okay, kiss, we're good. All right, bye.
I had fun, don't get me wrong, but we had like 3 parties that we needed to go to. Mm-hmm. 2 of them were 35 to 45 minutes away from the house. And so I was like, okay. It's like, I'm not drinking and driving. So I was like, I'm just going to be... So I drank water, a lot of water, got my hydration in for the day. And
I did too. It's called Coors Light.
And so we went out and then worked our way back, and then we got back to the house by like 11:30, 11:40. And so then I had an adult beverage and enjoyed, the New Year coming in. But I was just like, I just don't really feel like doing that. By 12:30, I was in bed. Yeah,
me too. I walked the kids home as soon as 12 was over, and we walked home. That was it.
We went up to our hunting camp in between Christmas and New Year's, and it's in the panhandle of Florida. So, we go up there, hunt, kids have fun. We got campers and stuff. We got a well, so we got running water, bathroom. Well, it got so cold, it was in the 20s, the low 20s for like 20,
you're saying that in some of our
20 hours
in Canada.
Oh, yeah, I know. But it was in the 20s for like 20 hours. Mm-hmm. So the pipes all froze, the well froze, it burst. So we got there in like the first 2 days. It was like, the first 2 days we couldn't do anything to even work on it because everything was still frozen. It wasn't till day 3 when it got up into the 50s that everything thawed out and we could start working on it. So it was an interesting time in the woods with no running water.
I can imagine that.
It was terrible.
But usually in the woods you don't have any running water.
we do. We have a cook shed that we've built, and we've got, campers, and we've got running water and outdoor showers, and
wow,
it's awesome. We have it is. We have an Insta-Hot, which you hook it up to propane and you just turn it on and get hot water right away, and it's fantastic because when it's in your 50s, you can normally take showers at night after you've been doing working all day or doing whatever, and it's just you're under the stars taking a hot shower. It's just awesome.
That's pretty cool.
It is, but there was none of that while we were there. But it was wasn't too much sweating because it was in the high 20s, low 30s.
Oof. Yeah. That's not
what do you got for us today?
So the question arose. Someone's on the site and they wanted to know. They're like, look, I want to buy my first note. I'm looking at a mortgage note right now, and I'm looking at a CFD. I'm looking at a land note. What's the differences in cost for due diligence versus land for a mortgage note? And what are the differences? Do I need to get a different document when I'm on a land note, or do I need to get a different document on a CFD to a mortgage? What's the due diligence differences? Like what do I know if I'm like, okay, this set of tools for land, this set of tools for CFD, and this for mortgage and deed of trust, or is that not the case?
So it's a little bit different. If it's just strictly a land note. If it's a land note in Florida, it could still be a mortgage. So you got to look at it and say, okay, don't decipher the difference of if it's a contract for deed, because you could have a contract for deed on vacant land. You could have a mortgage on vacant land. You could have a deed of trust on vacant land.
Okay.
Right? So you need to look at it and say, okay, really it's what's the underlying collateral? Is it a piece of vacant land? Is there a single family house on there? Is there a duplex on there? What's going on? Okay. So I think we've kind of gone into the differences between contract for deeds and mortgages or deeds of trust of running due diligence.
Right, I think we've covered that.
We've covered that. So let's just talk about single family home versus vacant land versus maybe vacant land with a trailer, a mobile home on it. right?
Vacant land with a hot shower on it.
Vacant land with a hot shower on it, yeah. Vacant land with that's so there is some differences, right, in the due diligence that you're going to look at. One of them is because on what you're going to find, I think, is the biggest thing is value, like the value of the underlying collateral. So whether it's the vacant land or whether it's the land in the house, right? Because if it's a land in a house, that's pretty straightforward. You can go out half a mile, or if you're in a rural area, you go out however far it is to kind of find a similar comparable house.
Oh, wow, I can see how that could be really hard to find.
With land, you can run into something really, really easy, and you're like, oh, this is so easy. There's a comp. This one next door sold for this. Let me give you an example. Maybe somebody bought a 20-acre plot or a 30-acre plot, and they threw some roads in there, right? And they chopped it up into 1-acre parcels. So maybe you got 25 1-acre lots that they're selling, right? And they sell them all for the same thing, and they're taking owner financing in, and they're collecting $6,000 down, and they got this. Well, there's you like if you're buying one of those lots, you've got 24 other comps, right? But how good are those comps really? Because it's all concentrated in the same neighborhood on somebody who's doing owner financing. You don't really know what the underwriting was like to get those loans done. You see what I'm saying?
Yeah.
So doing the land is a little bit more difficult.
More difficult?
Oh yeah, evaluating land is more difficult as far as getting the value.
Interesting. I didn't think that was the case.
Why?
I don't know. I just thought it was.
Well, it's so. The reason why is because you can oversell the land, right? So land in the area might go for $12,000 an acre.
That's
we'll just say $12,000 an acre, and you're selling it for $36,000 an acre with $6,000 down, right? So if you go to do the comparables, you're like, well, there's 20 loans, there's 20 lots here at $36,000 an acre. Well, it's $36,000 an acre because you sold it to people who could put down $6,000 and they want that land. Does that mean that's the value of the land? I don't know. Is it? If nobody else outside of that neighborhood is able to sell a 1-acre parcel for $36,000 to somebody cash, what does that mean for the values over here? So, and I'm not saying that the land is that's not the value of the land, because it very well could be, right?
Right.
Because that's what somebody was willing to pay if they could have credit extended to them. But usually what happens is you're buying it for $6,000 an acre and selling it for $36,000 an acre. And there's a huge markup there.
Oh, when you're buying it.
Yeah, when you're doing the one buying. And so what I'm saying is, whenever you're buying it and slicing it up, it's really hard to peg the value on land. Versus houses is much, much easier because banks are lending on houses. There's a lot more people needing a place to actually live. So a 3-2, 1,200 square feet, there's a good chance if it's not in a rural area, I'm going to be able to pin down a value pretty simple. I can go look a half a mile out. So it's easier to run your values on that. But land can be just very subjective. It can be like, well, what's the value in the land? What's the value of the dirt? Like if you're buying a loan that's got an actual physical house on there, well, usually the actual physical property makes up a majority, of the value.
That makes a lot of sense.
Like land value is usually less than house value. Now there's some stuff, we can get into it and say, obviously some of the land values in Windermere that have the older houses on there, Windermere is a nicer, you see what I'm saying? So that's one thing that I think is a little more difficult is establishing actual value of the dirt and be like, because at the end of the day, I'm always worried about what do I have to do if I have to take this back.
Yeah, and so for that process too, I thought, and this is just me not knowing, but I figured, worst case scenario, you have to take the land back. Actually, we had it happen on our site. Someone actually did this same thing, and I told them to do this. And so they had to take the land back. Usually when it's a land thing, unless they're living on it, They might just have, a camper with a cook shed and hot shower on it and some running water, and then or maybe not even all that, but it's not the primary residency. So if something bad happens and God forbid they're in a tough spot and they're not paying for it, there's a higher chance that you could just go to that person and say, look, I know you're in a tough spot. Look, I don't want you to have a foreclosure on your record. Why don't you just deed this over to me and you can walk away, call it a day. Cool. Yeah. And a lot of people, most times they're like, no foreclosure, another thing off my plate, don't have to worry about this. Here's a deed, whatever, we had fun, we did. And then they walk away. And then at that point, exactly what happened is the guy, I said, get it back and go to these land listing sites, which was like 50 of them. And just go to these sites.
Resell it,
put it for owner financing as soon as you do. Take something, season it for a couple months, and then come back to the site and list it. And
sell it.
And he did. So for me, I was like, well, I thought that the process of loss mitigation would be extremely faster. I might be totally wrong, but I imagine somebody would fight for their house a lot more than they would fight some land out in the middle of the woods.
They would, but if what if they've drilled a well? What if they've got a camper or a mobile home on there? Now they've got something there. So, which also starts to come to, like when you're doing research or when you're doing your due diligence on what's vacant land and it's got a mobile home on there, you have to figure out, is the mobile home included in the mortgage? Is it secured by that mortgage? Or is the mortgage secured by that mobile home? Right? So if you have to foreclose, are you entitled to the mobile home? Right? There's a lot of different things on there. Or is it just the land? So
you would find that in the contract, though, right?
If there's a mobile home, yeah, that would be in the mortgage. You would be able to look in the mortgage and kind of see.
Okay.
It should mention it. It shouldn't talk about title, or there's affidavits it can sign affixing it to the mortgage. So those are the important things, I think, when you're looking at vacant land versus single family is, hey, what's going on?
Right. So that's interesting. Yeah, because I guess if you're always looking at value, that's important. The thing that I would also see too, at least with a lot of this land sellers,
title. That's another one. If there's a mobile home, is there a title to it?
Yeah, it's
because if you're foreclosing and that's included with it, or it is affixed to the mortgage, you really have to find where's the title. And you can go through the DMV. There's a lot of ways. There's a lot of stuff that you can do to track down a title.
You go through the DMV, yeah.
Oh yeah.
Well,
yeah. And I only learned that because I did a deal with First National, and they're like, "Do you have title for this?" And I was like, "No." They're like, well, can you try to get it? And I was like, I don't know even where to begin. She's like, I'll just call the DMV. And she called the DMV and she had it in like a day. I'm like, I learn something new every day. Yeah.
DMV would have been not my first guess.
No, that was not, I didn't even know where to start. And, Rachel Sims over there at First National pointed me in the right direction. So she was great.
So what are a couple of the other things where I kind of looked at the land and I said, I think maybe it was an easier entry point a lot of times is because, and I might be totally wrong again, so a lot of times with the mortgages and deeds of trust, whatever, stuff with houses, if they legacy assets, you have to verify the chain. There can be a lot more chances for stuff to be screwed up.
Sure.
But with the land note, a lot of times these land investors, they sold this thing a year ago. And they held it for a little bit. It's their original lender, and that person, you're talking, when you're buying it, you're talking to the original lender. That person's like, yeah, I know, Sue and Joe, I sold it to them.
That definitely, that makes it easier for tracking the chain of title, as long as they've dotted all their I's and crossed all their T's. And one of the things also that I found is the land guy, not saying all land guys, but sometimes it's not uncommon for them to not use a professional servicer. And so you're looking down the barrel of, okay, I've got these loans that I'm buying, these land notes that are great. Most of the time, the nice thing about land notes is they're 9, 10, 11, 12. I've seen 13% interest rates. There's
going to be some coming that are 12.9.
12.9%. They're super steep, but they may not have professional servicing in place, or they may not have origination docs. Sometimes it's like a one-page contract. Here, sign it, shake my hand. They gave me $6,000 down. They gave me $100 bills, and
And the closing was at Chili's.
Yeah. For real. That's yeah.
I'm not joking. It was, the Chili's. You sign it, you have a beer, and you guys go on your happy way.
And that's it. And so there's a deal that we helped broker that was a big deal, a land deal. It was like $6.8 million and 108 loans.
Yeah.
And they had to go back and redo every single mortgage and every single deed because the way it was just like it wasn't done right the first time. And so there's usually what I find is the land stuff, there's higher interest rates, higher returns, a little more risk on, hey, did they actually do the documents? And don't get me wrong, there's a group I know of out of Austin that they are turning and burning these things. I mean, they are buying up 100-acre plots and then they're getting them all in, chopping them up, selling them. They're originating these loans to look, smell, taste, and feel just like
those are some good ones.
Those are good loans, 11.9%. But they also, they want 87 to 93%, depending on how long they've been seasoned for. So
can you argue with that?
No, you can't. They're doing a good job because
you're an income stream at that point. So
yeah, you are. So, but you got to look at. Then there's the other side of the equation where you got people who are closing at Chili's with a one-page contract, and a lot
of some people that just have digital docs. They're like, do I have to send something to the auditor because literally you want me to print it off my computer and then send it to them? It's all digital. It's all digital. It's
so
just okay. As long as the buyer's cool with it, then we're cool with it. The other thing too is the shorter terms. They're usually shorter terms. I think
5 years.
5 years, and they're a lot of times they're lower balance.
Those are some of the nice things about the early entry or the low entry point. You can buy them for $5,000, $6,000, $7,000.
You can kind of get the process down.
Have it a 12% income stream that's got 5 years. I mean, come on, who doesn't like that?
That's just simple. And then the other thing too, a lot of times, at least I'm seeing it now. It wasn't the case before. I've told one of our big sellers, like he's like, look, when we sell these things, it gets funky and or the servicing part. And I just said, why don't you just make it a part of your negotiation? Servicing is retained with the seller. I was like, you keep that small little bit of income, but they have the assurance that this stuff's not getting messed up. Like that person just keeps paying that same servicer, and that person just changes where the wire goes to this guy now instead of going to this guy. Mm-hmm. That's something because that if you're only making what did you say like $300 or $400 or $200 a month, and your servicing fee is $20, jeez, that's a lot. Over long, over 5 years, it kind of take a lot of your money.
Right,
to collect the check. So it's like if you can keep it with them, usually they don't. It's a way lower because they're not even usually paying. I've seen they get $8.
Yeah. Some of the things I've seen is that group out of Austin, borrowers pay all the servicing costs.
Really?
Yeah. It's like
wow.
Borrowers pay $15 or $20 a month for servicing costs.
Wow.
Loan servicing, which I thought was fantastic. So.
It's fantastic.
So I don't know. I think that's it.
I think you answered a lot of it.
I did.
Values.
I did. There wasn't. Yeah, values. I mean, I like to usually have bullet points, so it's like here, this, and this. But that was kind of a lot. But values are a little tougher. You really have to look into them. And values on vacant land is subjective. Title for if there's a mobile home. Is the mobile home affixed, and does the mobile home secure the mortgage?
Check the DMV. The DMV.
DMV, yeah. And so, and then look at the origination docs and have somebody look at it and make sure everything was originated properly and it's in good working order. So,
a twist question: when you do the DMV, do you have to do the county DMV or is it like a state? How does DMV is like a statewide?
I don't know. Don't ask me that. I told you, I don't know. I didn't dive in. She said I founded the DMV. I'm like, 10-4. I got other things to worry about. That's like, you're handling it? Look, I don't go ask my surgeon, like, do you lift up on the stomach and then go to the intestines? Or the intestines you pull those? I don't know. You just fix it, man.
Yeah, I got you.
Doc, just fix me.
I got you. All right, well, cool. Well, if you guys got your own questions, of course, you know what to do. Put them in the comments here. If you're interested in learning more education, we got the Academy, which is probably rolling a video right now that you can see. And we look forward to having another bunch of success with these videos. If we can just keep coming up with awesome questions that come from our audience, and we'll keep making them. So happy 2023, and we'll see you in the next one.